Alright, dear friends, for teaching this strategy, I'm using the quotex broker. If you're interested in trading with this broker, you can easily sign up through the link in the description of this video and start trading. Now to begin, we need to set the candles to candlestick mode. As you can see, we're setting the time frame to 2 minutes, and the trading time should also be 2 minutes. This is a very simple strategy where we use moving averages. I'm going to add 3 moving averages to the chart, and I'll explain the settings step by step so you can follow along. By using these moving averages and trading with the trend, first we select a moving average and set the period to 6. We'll keep it as an SMA, simple moving average. We don't need to change it to EMA or anything else. We'll keep it as SMA. Let's set the color to blue and make sure you choose 3 different colors for each moving average so that it's easy to distinguish them on the chart and you'll know which period corresponds to which color. I'll also make the line a bit thicker so it's easier to see in the video. Then we go back and add another moving average to the chart. This time we set the period to 14, again keeping it as SMA. I'll set the color to yellow and increase the line thickness for better visibility. Next we'll add the third moving average, setting the period to 50. And again using SMA. For this one, let's set the color to purple since it stands out well in the video. Now as you can see, we've added 3 moving averages to the chart. The first one has a period of 6 and is blue, the second one has a period of 14 and is yellow, and the third one has a period of 50 and is purple. It's clearly visible on the video. The first thing we need to do is determine the trend direction so we can trade with the trend. We need to identify whether we should look for buy signals or sell signals. To figure out the trend, we use the 50-period moving average. This moving average helps us identify the trend. How does it do that? If the 50-period moving average is above the candles, like here where the candles are moving below the line and the line is sloping downwards, it indicates that the trend is bearish. If the moving average is below the candles, like here where it's sloping upwards, then we know the trend is bullish. It's that simple. So the first step is to check whether the trend is bullish or bearish. Here we see that the 50-period moving average is above the candles and sloping downwards, indicating a bearish trend. As long as the candles don't break above the 50-period moving average, the trend remains bearish. Once the candles break above and the 50-period moving average moves below the candles, then the trend has shifted to bullish. So that's the first thing to keep in mind. In this case, since the trend is bearish, we're looking for sell signals. Now let's move on to how we find the signal and when to enter a trade. This is where our second and third moving averages come into play. We have 2 other moving averages, the 6-period one in blue and the 14-period one in yellow. We're looking for instances where the blue and yellow lines cross, like here. However, it's not as simple as entering a trade whenever they cross. Let me explain this in detail. The key point is that in a bearish trend, when we're looking to enter a sell trade, the blue moving average, 6-period, should cross below the yellow moving average, 14-period. This is an important signal for us, but remember, it's crucial not to confuse the 2 lines. It's the blue line, 6-period, that should cross below the yellow line, 14-period, not the other way around. If the yellow crosses above the blue, that's not a valid signal for this strategy. Now, I'll clear the chart so it doesn't get too cluttered in the video. Alright, so here we have a downtrend. We've identified the moving average crossover between the 6-period and the 14-period, meaning the blue line crossed below the yellow line, which is acceptable for a sell signal. We also see that when this happened, there was a price drop. We are working with 2-minute trades here, and as we see, there were 3 consecutive red candles, followed by another drop, continuing the downtrend. Now we'll go back and review a few more setups in the past, and then we'll look at live trades and execute a few trades together to see the results. At the end of the video, I'll also explain another trade that can be added to this strategy. Now let's look at the opposite scenario. In this case, the moving average is below the candles and is moving upwards, indicating an uptrend. Here we see the blue line crosses the yellow line from below, and a successful buy trade could have been made. So, when the trend is bullish, the blue line should cross the yellow line upwards, and when the trend is bearish, it should cross downwards. As for additional confirmation to improve trade accuracy, we can also use an oscillator that you're likely familiar with, the MACD. You can add the MACD to the chart with its default settings to help confirm the strategy. I've already posted a tutorial on MACD, so if you haven't seen it yet, be sure to check it out as it can be really helpful. The MACD consists of two lines, and when these two lines cross, it gives us an extra confirmation for our strategy. So if the moving averages cross on the chart and the MACD lines cross as well, that's a stronger signal, and we can expect a better result. However, keep in mind that the moving average crossover and the MACD crossover won't always happen at the exact same time. The MACD might cross a candle earlier or later. Let's go over a few examples. In the previous one, we looked at the moving averages crossed for a sell trade, and we saw the same thing happen on the MACD. Now here's something important. We see that the 50-period moving average is above the candles, indicating a downtrend. So that's our first condition met. The second point is that the 6-period moving average crossed below the 14-period moving average, which confirms the sell signal. But if we look at the MACD, we notice something crucial. The MACD lines haven't crossed yet at the same point. The green MACD line has only touched the red line and reversed upward. So, if we didn't pay attention to the MACD and placed a sell trade here, we would have lost that trade because the price reversed after this candle. The MACD eventually crossed a bit later, and then the price dropped. This is an important lesson. We must consider all factors to ensure we make the right decision. The key question is, when exactly should we enter the trade? The correct entry point is the candle following the crossover. So when we see a crossover like here, we should wait for the next candle to enter the trade. For example, if the crossover occurs on this candle, we enter the trade on the following candle. In this case, we also notice the MACD crossover a few candles after the moving averages crossed, but it was out of sync with the trend direction, which led to red candles forming afterward. This happened because the 50-period moving average was still indicating a downtrend and the other signals were not aligning with it. In conclusion, if all conditions, moving averages, MACD, and trend direction are aligned, we can achieve great results. Now let's move to the live chart and apply this strategy in real trades, and we'll see the outcome together. Alright dear friends, I've entered a sell trade here based on the explanations I previously shared. Our 50-period moving average, which is shown in purple, is positioned above the candles and is sloping downwards. This indicates that we are in a downtrend, so we should be looking for a sell opportunity. Here we see that the blue line, which is the 6-period moving average, has crossed below the yellow line, which is the 14-period moving average. We entered the trade exactly on the candle following this crossover. We also see that the MACD shows the same crossover confirmation. Now we'll wait together to see the outcome of this trade. The time frame is 2 minutes and the trade duration is also 2 minutes. Alright, our first trade has successfully closed in profit. Now I'll look through different charts for more opportunities, and I'll place another trade as well. Alright friends, I've opened a trade here. Unfortunately, there was a bit of a gap, and my trade opened late with a sudden jump which caused it to open much lower than expected. But as I mentioned earlier, look here, the trend is downward, and the blue line crossed below the yellow line. The MACD also showed a crossover. My trade should have opened here, and I clicked on time, but unfortunately due to the jump, it opened lower than anticipated. Now we'll just have to wait and see how this trade plays out. If it had opened where it was supposed to, or if this gap between the two candles hadn't appeared, which is unusual and problematic, it would have been a different outcome. You can see that a red candle is forming, and we could have easily profited. This time though, the trade might result in a loss, but it's due to these two issues. First, the gap between the two candles, and second, the jump that caused my trade to open much lower than where I clicked. This trade closed with a loss, but I've already explained the reason. The delay in opening my trade caused this loss. A gap formed here, and my trade opened around this point. Even though the gap itself might not have had a huge impact, if the trade had opened exactly at the start of this candle, we could have profited from the small body of the candle. Unfortunately, the delay caused the loss, but that's okay. The strategy still works, as we can see. When we follow all the rules properly, it yields positive results, but sometimes these types of issues and problems occur. Dear friends, as you can see here, our trend is an upward trend according to the 50 moving average. The cross between the two moving averages, 6 and 14, has occurred, and here the MACD has also shown a cross. I opened this trade with the start of this candle, which is the candle following the cross. As I've explained before, sometimes the MACD and moving average crosses may not occur at the exact same time, and there can be a delay of 1 or 2 candles. The cross happened first on the moving averages, followed by the MACD. We entered the buy trade at the start of the next candle, and now we'll wait together to see the result. As you saw, this trade also closed in profit. I hope you enjoyed this strategy. Make sure to practice it thoroughly on a demo account first, and please share your trade results in the comments under this video. Dear friends, to make sure you don't miss any of our videos, please subscribe to the BS Academy channel. Also, Activate the notification bell so that you are informed as soon as we publish new videos. Thank you for your support.